Chaplin Hill Advisors, is here to walk us through the numbers. Kathy, welcome back to Rise Exchange, as always.
Great to be here.
All right, I want to start with the market for a moment. Is this related to any sort of fundamental news, or simply that we've had a really good run, records in the NASDAQ, records in the S&P 500, simply some excuses to take money off the table?
I think it's a combination. We have 1,251 days without a 10% correction. Historically, the S&P has corrected once a year.
How many days?
1,251 days.
Wow.
As of last week, so add on a couple more days. So that's a long streak without a correction, and we've gone up 223. No, we've doubled in price. So, and PEs are extended, and so at this point, the market. So
the market, you're thinking the stocks are getting a little expensive on the price to earnings ratio?
They are expensive. Yeah, they're 18 times on forward earnings. They're 27 times on the Case-Shiller model on the smoothed out past 10-year. So they're expensive any way you cut it. Some sectors are much more expensive. So the safe sectors like consumer staples and utilities are trading up 29% for one last year, up I think 20% for the other. And so their PEs are trading at about 10% premium to S&P.
And any of this sell-off related to the possibility? It's hard to see what the Fed is going to do. They removed calendar references from its comments, so it didn't happen in April. Maybe it'll happen in June, but now some people are thinking September. Any of that play a factor in here as far as raising interest rates?
Absolutely. So if you take the big picture, why has the stock market gone up? Because zero interest rate policy. So ZIRP has driven people into stocks, a lot of dividend stocks. That's where a lot of the money's gone. So now everything's hinging on, is the Fed going to raise? Is the Fed going to remain flat? So that's why the data is throwing the market back and forth. So yesterday, the bad news was not good news. The bad news was truly bad news.
The gross domestic product came in at an anemic 0.2%.
Yes, and down from 2.2%. And way off the consensus of 1%, and inventories rose. Inventories were already a historic high, and if sales aren't happening, why are inventories
we talked
rising?
about that yesterday. Companies are stocking up on inventories, and if they're not able to sell that, what we're going to start seeing then is companies slow down their purchasing.
Yes, and so there that becomes a whole little, domino right down the line. A lot of people are also concerned about the numbers that came in today and whether or not the BLS, which is the Bureau of Labor Statistics, is putting some more artificial stuff in there because they have an artificial birth-death ratio that's based on a long time of history that's not happening nowadays. So there really aren't.
Yeah, what people have to understand is the Labor Department estimates the number of people who are going to die every month.
In business. Business owners.
Business owners.
And new ones that are born. And in this kind of environment where there's no access to capital, there's anemic spending in a lot of areas, there's not new businesses being born. So you're not replacing
And when those businesses are born, they then estimate who's going to get hired into those businesses.
And so those numbers get factored in to a lot of the estimates that we see.
Look, Bernie Sanders, who's running for president, says the unemployment rate is 11%.
Yep, and in some sectors, like the 26 to 34-year-olds, a lot higher than that. 60% of 25-year-olds are living at home. 34% of 30-year-olds are living at home. So that whole area of unemployment is affecting the housing market.
Oh, but if you're going to long-term in the housing market, based on those numbers, would you not buy property where you can rent it out? Because they're going to eventually leave home.
Absolutely, and they can only rent because they're not,
they don't have the money to buy.
And they don't have stable jobs, and it's very hard to get a mortgage.
We start the show with sort of the Dr. Jekyll and Mr. Hyde-like analogy as far as the economic numbers. Is it historically accurate that we always get volatile numbers like this, or do they at some point have to kind of match?
Well, at some point they should start matching, and this back and forth ping pong is driving the market crazy. The market's been in a trading range since November. So even though we made historic highs last week, it's a lot driven by certain sectors.
And the market is now down for 2015.
It is for the Dow.
Kathy Boyle, thank you so much.
Good to see you.
Appreciate it. Well, both